Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show. Hey traders, let's take a moment to thank and feature one of our top.
Good morning, traders. Welcome back to another live stream. And today we got a big one for you. In fact, I couldn't possibly put together a more important stream than this one. Today we are getting ready for the Consumer Price Index, which comes out in just over 10 minutes. And first of all, I cannot understate how important this is to markets today. Whether you trade currency pairs, whether you trade gold, whether you trade the indices. Real quick, can I just get a pulse check from you guys in the audience? Comment section or the chat here with me. Comment what you are most interested in watching here today. Let me know. Are you somebody watching the S&P? Are you watching the NASDAQ? You watching gold, the US dollar, euro dollar? What are you guys watching? Drop that, spam that for me in the chat for just a second, if you will. Good morning to everybody in here. I see lots of you guys. I do see your comments, and good morning to everyone. So we are watching, like I said, coming into the CPI event. Most markets are going to be moving pretty dramatic. Lots of gold traders here in this morning, so we will definitely be reacting to gold. That is one that I'm personally watching. Got some NASDAQ traders in here. Good to see you in there. Of course, my personal favorite is the NASDAQ, and some real big key numbers to come out. And I started the show by saying I cannot underestimate or undervalue just how important this CPI figure is to markets. If you're somebody who is mostly a technical trader, you already know, yeah, it causes a big spike. But if you're a fundamental trader, what you know about the CPI data is that it changes the landscape of the markets if it is truly a surprise. If we get a hot read here this morning, it will drastically change the market landscape for the coming days and possibly even weeks. Let me illustrate what I mean by that. If you get a CPI hot this morning, the S&P, the NASDAQ, by the way, gold, and the Dow, all of these markets will come down hard, right? If you get a hot print, what do I mean by hot? Somebody asked a comment recently on one of my videos, what is a hot read? Hot read is a higher than expected, meaning inflation is really higher than what people were thinking it was. That's a hot print or a hot read. And if we get one of those this morning, get ready for some heat in terms of some of these markets could take a little bit more of a bath, right? Somebody liked that I said that. I said in one of my videos recently, oil's taking a bath when it was dropping hard, but it's not taking a bath anymore. The oil market's jumping back up. There's almost 700 people in here. We've got a lot of people asking to take a look at gold here. We will definitely do so. We'll look at the NASDAQ. We'll look at the dollar, of course. And I think a good place to start, we've got 10 minutes on the clock here, guys. A good place to start with all of this is to definitely start out by taking a look at the US dollar. Okay. Why the US dollar? Well, because whether you trade currencies, indices, gold, whatever, the dollar index is kind of centric here this morning. Because if you do, in fact, like I said, get a hot print on CPI, this area could very well turn into a major leg of support before what I would anticipate to be a potential continued rally above. Now, the expected number today, guys, is 2.9% year over year headline inflation. If you get something like 3 or 3.1, psychologically, this really throws a loop in the story of cooling inflation, right? If the economic data is real strong, if the stock market rally causes some stimulus by itself, does a little bit of the Fed's job, markets have the ability to do that, by the way. A strong, stock market rally makes everybody a little bit more richer. Everybody being a little bit more richer means more spending, more inflation, right? So the thing is here, this morning, we are going to get the numbers. We're going to see, do we actually hit targets of 2.9 or less, right? Either one of those scenarios would send the dollar down most likely. 2.9% or less, in my view. Well, 2.9 would probably cause some just volatility back and forth, to be honest. That's kind of what the market is thinking. We can see, by the way, what the market is thinking by looking at the CPI read right here. So you can see 2.9%, previously was at 3.4. So we are expecting a meaningful year over year decline in inflation. If you don't get that, I want to reiterate just how important this is, guys. If you miss to the upside, if inflation is hotter than expected, these markets right now are priced, especially I'm speaking primarily about risk assets, risk markets like the stock indices and so on and so forth. They are priced for inflation to come down meaningfully. If they don't, the indices get a rock thrown at a glass building. Okay, so more like a boulder thrown at a glass building, because what we're looking at in that scenario is the story of rate cuts gets really challenged if you get a hot print here this morning. That's why I keep reiterating that is where you would probably see the biggest spikes here this morning, would be a beat or a hotter than expected read in the inflation department. If you get a miss, if you get a lower than expected print, it's probably business as usual with the stock markets, and with the dollar index, a lower than expected print probably takes the wind out of the sail of this recent upward move. So again, it all comes back to the dollar index. Whether you trade currencies, gold, or indices, we have to start, I think, with the dollar index. We are sitting at support on the daily chart. And if this CPI print misses, meaning it is lower than expected, that would be great for risk assets, because they would say, hey, rate cuts are on the way. And rate cuts on the way means the dollar index, probably drops hard. And you probably see the euro and the pound jump big here this morning. So you may be wondering through all this conversation, well, Nick, what do you think is actually going to happen? And let me just say, if that's something creeping into your head, first of all, I'm sorry to disappoint you, but I am not a fortune teller. As a trader, I react to these numbers and I trade the post news. Let me be clear. If we do get a cooling print here this morning, like a real good beat in inflation, I probably capitulate on some of my ideas. What I mean by that is that I'm not too, when it comes to trading, I think it's really important to acknowledge when an idea is wrong, or hold on to something when you're right. So I've been thinking, I've been in the camp of dollar bullishness, but if this morning we get a print that is really cool, I'll probably stop out of some of my positions and actually maybe look to start getting more bearish on the US dollar. That's if we get a CPI print that's cool. That's not what I think is going to happen. That's what I will do if cooling inflation is, in fact, kind of coming into the picture. However, if you get a hot print, I stick to my guns and I stay bullish, looking at a target of a potential move up to 106 on the US dollar currency index. If that makes sense, do me a quick favor, type yes in the chat and I'll move on to something else. We've got 5 minutes to go, so I want to make sure I get to another chart here. Just quickly type yes in the chat for me and I'll move on. Okay, so again, how does this impact gold, indices, etc.? Well, remember, a hot read on inflation, bullish for the dollar, pretty much everything else drops, right? Because if you get a strong USD, it's because interest rates are likely not coming down for a while. That narrative stays intact if you have a continued inflation problem. Okay, so it's not all technicals here. If you're new to the show, let me just burst your bubble for a second. We don't focus solely on technicals here. We talk about what's actually moving the markets. That's the story of the markets. That's fundamentals, right? Inflation reads, the Fed speak. We take a look at jobs numbers and what do they actually mean for markets that we're trading, right? I want to understand what I'm buying and selling. I don't want to just do a pretty pattern on the chart and say that's all I need to do, right? I think personally you need to understand the story. And while I do use technicals, you can see them on my screen, that's not solely what I use to make my decisions. So that's what we're looking out for. Again, thank you guys for the yeses in the chat. Let's move on to gold, because I know a lot of people are interested in gold. Indices selling off slightly here before the news. We'll see if that either reverses or continues. And gold, again, today is decision day for gold, I think, because if you get, again, you're in the middle of this range. This thing has been so choppy. If you're a gold trader and you've been struggling here recently, if you're a trend trader, I want to say it's probably not solely your fault. You're trading in a choppy market, right? This is a very, very hard market to trend trade. Because if you saw this move and you're like, oh, it's getting bearish, I'm going to get short, right? And then boom, it drops back into range. Or, hey, it's getting bullish, let me go ahead and get in on this bull. Oh, and it's back into the range, right? This market's been choppy and difficult to trade. However, if you get inflation numbers that give us a strong conviction one way or the other today, I think we're back in business with gold trade. Now, I love trading gold, but I haven't been trading it. Why? Again, how am I supposed to make money as a trend trader when the market doesn't trend anywhere, right? At the end of the day, I need a trend to make money. And if there's no trend, I can't make money. So I'm waiting for that to happen. If you get hot inflation numbers, we probably take out the lows, right? If we meaningfully take out the lows, boom, I am looking for entries. I'm looking to sell into that move. If we get inflationary numbers that are cooler than expected, and it looks like we might get rate cuts, boom, we probably take out the highs, and I'm a gold bull. Right now, I am in for neutral. In for Nick, in for neutral, okay? I'm neutral right now on gold. I'm waiting for this thing to make a decision, and today might give us that number that actually gives us some conviction one way or the other. Hopefully that makes sense, but again, today is decision time for gold. We'll see if this actually can make a break one way or the other. I know a lot of people are going to have their opinions. I lean slightly bearish due to my dollar bullish thesis, but if that gets erased today by cool inflationary numbers, I am not above the idea. I want to make money. I don't care if I have to be, changing teams or whatever. I want to make money. So if inflationary numbers, and I say that, not in a greedy way, but I want to be constructive with my trading. At the end of the day, if proving, inflationary numbers are really cooling, I've got to switch camps. And to me, that would mean, hey, there might actually be some bullish opportunity for gold. Guys, we're just over 2 minutes away. I just want to say we got 1,165 people between the two channels watching here. Thank you for hanging out with me. And I hope that this brings you some sort of value. If you're new here, make sure to hit the subscribe button and the thumbs up button on the stream. Let's get ready for the actual numbers. We took a look at dollar and gold. I know index traders, I will get to those markets. You know I will. I love trading and watching the indices. It is my personal favorite thing. But again, I gotta go with where the crowd wants to look at, which is the dollar, looking at gold, which I don't mind doing at all because they impact my ideas as well. The S&P 500 holding on to that 5,000 is going to be the challenge of the day. We're about a minute and a half from CPI numbers. We'll be reacting to the news numbers. Let me just say and call this out as I do every time. A lot of times we get into these news numbers, the second the spike happens, everybody who is just kind of here for the fun walks away. If you're here for the real trading, stick around because after this, we'll be getting into some key stuff to help prep for the day. Now, again, guys, we're going to get some reads on inflation. Inflation has been coming down. It's gone sideways recently. Are we going to get the continued downtrend, which is what the Fed wants? Or are we going to stubbornly stay at this level, which could hold interest rates higher for longer? We're getting some of that story in the next minute. This is why things are so important right now. Hit that thumbs up button. We got 1,200 people, and we're about 40 seconds out. Just so you've got all of your bearings here, guys, as you're watching the screen, S&P here, NAS here, Dow, the dollar index, euro dollar, pound dollar, gold is in your top right, and oil is in your bottom right. So most of us are going to probably be watching one of these assets. So I just wanted to fit it to the screen so that everybody can get settled in. Nick is actually a good looking guy. Thank you, FX Ashif. Thank you very much for that. Very kind comment of you. And again, guys, we got about 10 seconds to go. Breaking news, CPI. All right, let's have a look, see what we get on today's numbers. About 5 seconds to go. All right, and the S&P 500 dropping below momentarily. That S&P under 5,000. NASDAQ just dropped hard. Euro, gold dropping, pound dollar dropping. Dollar index is jumping here. And look at that move. Let's have a look quickly moving back over to Forex Factory to see what these numbers actually came out. And let's do a little bit of analysis here as we get going. Again, I want to see these numbers to see, is this move likely to continue or not? Big move on the dollar. Big move on the dollar. Remember what we just said. Dollar index sitting at support. Looks like we might have gotten what we needed. Let's see, though, if we are, in fact, there it is. Hot prints. CPI, core CPI, and CPI year over year, 3.1%. That is a higher than expected. That is a hot CPI number. And guys, this is what we've been talking about. This is going to get the market's attention, in my view. We'll see if it, the market's been so strong recently, this might still find a way to rally this afternoon. But I will say, for now, this has the stock market a little spooked. It has the dollar rallying off of support as we were speaking about. Again, I mentioned Remember, if the inflationary number was cool, I was going to change my mind and say I was wrong. But so far, not quite the case. Looks like we might have actually been right to stay bullish USD. I've got some Euro USD shorts right now, which are probably doing okay. Let's have a look at Euro USD here. There it is, euro dollar coming into play. Love to see that. The dollar index is again playing ball here for us, holding support. Gold probably coming down. Let's see if it's actually holding those gains though. Yeah, I mean, it's moving lower, but look at that. This is kind of a mixed candle here. Again, this would, to me, signal that we could see more downside on gold, but the key factor here is going to be actually, can we break through key levels of support? I want to look at that S&P 500. Here's the thing. Let's do really quick. We'll go USD. Okay, so S&P 500, look at that big sell-off here. And what does that put us at? That puts us at, so far, a 1.5% pullback from the highs. Is this enough of a pullback? You know, to be honest, I think we have a little bit of room to come down to. Take a look at the S&P. You know, it's been just trending in a straight line to the upside. However, you have something to prove here, right? You can instantly, if you're someone watching the indices, you have support and probably a lot of buyers that are lining up right away to pick up the pullback. To be honest, I'm one of them, but I would like to try and see if I can be patient enough to get the pullback that I'm looking for. NASDAQ coming down hard here from the highs. We are looking at a pullback so far of about 2.4%. I've called out this area as a possible area for me to look at. If I do take that trade, I'll share it in the signals group. I'll be watching that inside of the Discord here today. If we can get it pulled back down to that area, I may look to build a position there. But going to have to watch that one close. Again, CPI coming in hotter than expected at 3.1% year over year. That is a hotter than expected read on inflation. And remember, we showed this chart, inflation coming down, inflation going sideways. This number is still going sideways. Again, bulls on the market wanted to see this number coming down. They need that solid footing where inflation is no longer a threat. But if you get inflation that continues to be a problem, guess what? The stock market, when it's looking in the eyes of 5 interest rate cuts expecting, and then the Fed saying 3, suddenly 3 sounds a little bit more realistic when inflationary numbers are not playing nice, right? These numbers, again, 3.1%, it's not like it used to be where it was like 9% at one point, but 3.1% is far away from that 2% target. And we were expecting continued downtrend in inflation this month, for the month of January, not getting it, right? Year over year, 3.1%. A strong economy seems to continue to be pushing back on this idea that inflation is cooling and that the problem is behind us. Again, let's go take a quick look at the top setups algorithm on the Edge Finder real quick, see where we are bullish and bearish here this morning. So again, anytime I take trades, this is where I'm looking to find them. So US oil staying bullish. Again, this would make sense, right? Inflationary. Actually, this is probably an even stronger read this morning to stay bullish oil. I have some energy ETFs that I've sold puts on, so I'm happy to stay in those positions here today because, again, hot inflation is indicative of a strong economy in this case, I think, right? I don't think it's the same supply constraints that we saw during COVID. I think that this is actually just the economy is, look at that labor market, PMIs, retail sales. I mean, numbers are coming in over and over, and this is why we've been bullish USD, right? Don't fight the fundamentals. And that has proven to be a very, very strong strategy. Aussie dollar, euro dollar, some currency pairs that I am currently bearish on in favor of the US dollar seem to be doing some work for us right now. Dollar yen staying bullish. The DAX, again, what this chart is doing for you guys, by the way, if you're new to the channel, we talk fundamentals constantly, but fundamentals are a lot, right? They're complicated. They're hard to understand. Our goal as a company, A1, we build trading tools for spotting fundamental trends for you, right? So you don't have to spend all day long, listening to me rant or listening to podcasts and reading articles to understand. This software is pulling in economic data and punching out bullish and bearish reads based on all of it, right? So we're looking at the commitment of traders data, retail positioning, seasonal trends, momentum in markets, economic stats like PMIs, retail sales, etc., inflation reads like CPI, which we just got, labor stats, and interest rates. We're considering these things in the algorithm and punching out bullish and bearish readings on all of your favorite currency pairs, indices, and commodities. By the way, even if you trade Bitcoin, we've been adding Bitcoin. Again, we should really be doubling down on our Bitcoin development. I know Frank can hear me, but Bitcoin just crossed 50,000. It's time to get some more crypto stuff going on in the Edge Finder because it's moving and, definitely interesting to watch that. Anyways, It takes all of your favorite currency pairs, commodities, indices, etc., and ranks them bullish, bearish, etc., based on what we see in the economic prints. Okay, if this is something, not only that, we also have the commitment of traders data, we have retail positioning, we have sentiment surveys, put call ratios, the seasonality reads, all sorts of stuff, the smart money indicator. If you don't have a copy of the Edge Finder, you may be hearing me coming to a pitch on this, and that is true. I do want to let you guys know that currently we are doing, let me go ahead and set up my pen, we're doing 35% off while we do this live stream. So if you are somebody who is looking to get a copy of the Edge Finder, if you've been watching the streams for a while, if you want to take on market data, this is how we trade using fundamentals. Pick up a copy for 35% off today. We're doing a massive sale. This cuts the price by hundreds and hundreds of dollars on the tool. If you'd like to take advantage of that sale before it ends, click this link right here. Boom, send us a direct message. And let me just show you what that does, just so you're like, where does that link take me? I will show you. It is a way to connect with a real person on my staff. So we have between everybody at A1, there's 9 or 10 of us that make everything what it is between the YouTube channel, content team, and stream team, and development side. We have a good number of people that work behind the scenes. If you'd like to speak with a real person on our team about the product and the huge discount that we're doing, click on that link that's in the chat. So also in the description, if you're watching back later, click chat now, click Edge Finder 35% off sale. It's ending soon. There's your fair warning. Take advantage of the 35% off sale, get a copy, and start trading with fundamental data to help you find better trading setups. It is a very, very useful tool to have in your toolbox. There's the NASDAQ continuing to push lower. And, I will say that this is actually some selling on the stock market. It hasn't happened in so long that I forgot what it looks like. I didn't actually know, guys, when looking at the stock market, that the candles could actually print red. I thought they only came in green. And even if they were moving lower, they would still be green. I feel like Frank would like that joke. I can see him smile in the background. But yeah, he likes that one. We'll bring in Frank here in just a second. Let's actually thank our sponsors real quick, guys. We're going to bring in Frank for his reaction to CPI numbers right after this.
Attention, A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, Frank. So I'm realizing today, I really genuinely thought that even when the candles go lower, I thought they still printed.
I heard you. I heard you the first time.
I know, but I just wanted to say it again because I wanted the people to see your reaction because I know you love that one.
Do you want to see? Do you want to see my reaction? Do you want to see my reaction to CPI?
Yeah.
Whoa, that's crazy.
There we go. We got that on file, guys. We'll save that, clip that one, and throw it out there. So, Frank, CPI 3.1%. What do you think about that?
Yeah, everything was higher. I kind of had a feeling yesterday. I even took a small long trade on the NAS just to see if expectations were going to work out. I quickly got stopped out and then didn't look back to enter until we saw these numbers, just because we saw wage growth in the last report on that Friday with NFP and unemployment rate. Wage growth increased, suggesting higher inflation. We've seen higher economic numbers on various fronts before this number. All things suggesting that we're gonna run into an increase in CPI this week, which is what ended up happening. So now I think it's time to switch the narrative on gold. It broke under that trend line. I'm no longer bullish. I think this is going to test the 2000 level, that psychological level. maybe even break lower to the 1970s or 1980s. And yeah, I think it's a dollar bullish week.
Yeah, and Frank, I just was pulling up the tool while we spoke about that, and check this out. So May, now a 97% chance we do not see a rate cut in March. So it seems like March basically off the table. But what really is throwing the markets for a loop today is that now we have a 57%, let's call it, chance that we hold rates in the May meeting. So, here's the thing, Frank, is we heard, and you know this, but the Fed pointed out probably thinking like 3 rate cuts this year. And what's been really frustrating to watch is that everybody's trying to lead the Fed. Everybody's trying to say, well, if they're saying 3, it's actually going to be 7. And then it became, well, if they're saying 3, it's actually going to be 5. And this number, Frank, it starts to make 3 start to sound way more realistic, right? Because, at this point, if you get 5 rate cuts, it's probably because we're going into a recession, right? So 3, the Fed has been like really transparent throughout this process where the market keeps trying to get ahead of it. So maybe the question is, I love this analogy. I listened to somebody speaking about this. The stock market may have gotten ahead of its skis, right? So it's like skiing down the mountain. It's like ahead of its skis, like it's going to start tumbling and rolling. And so I guess, what do you think about indices right now, Frank? The Russell taking a huge drop here this morning. The NASDAQ, of course, as well. Do you think these things are pickups pretty quick, as we've seen just such a resilient market recently? Or do you think they have more room to come down as they maybe kind of sober up on the idea that rate cuts aren't coming as fast and as easy as people thought?
Yeah, I think it's time for a bigger pullback now. So I'm kind of anticipating a larger drop in this, although you know how resilient the market is. I personally, after seeing this, don't really want to take a trade to the long side. But obviously, I'm still holding things like tech and the S&P
Sure.
and small caps for the long term. But in terms of trading, I don't think I want to, test out a long trade yet, because there's not really any fundamentals, at least this week, that are going to back it.
Sure.
I mean, earnings are important too, and that carried us this month so far. But when you see higher CPI, that obviously is taking the cuts off the table for March. It's probably going to take it off for a while. We're going to have higher rates for longer. I don't think we're going to hike again, but I think this means higher rates for longer. And I don't know about the 3 cuts this year either. I was
Yeah.
what I saw was 1 cut, and it would be like I think it was like a 25 to 75 basis point cut at some point here, and that could be in December, or it could not come at all. But we'll see. As long as we see the trend of inflation come down, we just need to see the uh, the current inflation to next month. We need to see either a halt or lower levels. We can't see it continue to climb.
Well, and Frank, I want to talk about something here that, yesterday, you and I were talking about this, I think, on the way out of the office. We were talking a little bit about how momentum seems to be really working in the markets right now, like very, very well. Like if you're somebody, maybe not gold, and ignore gold for a second, but if you are somebody who has been trading with momentum on, the indices or even the dollar index, momentum has held up very well. And what I mean by momentum is follow through moves in a lot of areas of the market, not necessarily gold. So again, I know the gold traders are like, yeah, you just got done talking about how range bound it is, but hear me out here. There's another trend here that I think is contributing to that. And it's not actually based on price action at all. It's fundamental trends are seemingly in place. And for those of you guys who have been watching the Edge Finders readings, a lot of this stuff has been dead on. Because again, what I mean by momentum is on the fundamental side is that things like inflation, labor statistics, PMI data, it's very much been kind of this consistent beat trend where we're just seeing hot everything. And if you've been somebody who's been riding that trend, it's been really, really profitable. And the Edge Finder, I think one of the cool things about it is it's masterful in momentum with fundamentals. Like when fundamentals are all sort of aligning and they keep rolling over each other and building a bigger and bigger, kind of price action trend alongside with it, that's what's led to a lot of really great moves here in the market. I mean, if you've been watching the USD pairs, they've been, actually pretty good overall. We got short Euro USD yesterday, or well, I did. I think Ivan also, I think he's in the chat. Ivan also got short Euro USD, I believe, and that move is kind of playing out. But look at these nice moves. These are fundamental trends, guys. Like technicals only may have gotten you into some of these trades, but fundamentals have been what has kept us persistently kind of, hey, everything is coming out hot right now. And until that changes, I think we stay with the momentum plan and we stay with some of the readings that the Edge Finder is giving us. So I don't know, Frank, do you see what I'm saying with with fundamental momentum? Do you kind of agree with that theory? Like labor stats just hot, PMIs hot, retail sales hot, GDP hot, and now CPI hot. I mean, it's been telling us the whole way. It's been very like momentum heavy in the fundamentals.
Yeah, no, I agree. And it kind of aligns with technicals. It sort of makes that trend happen.
Yeah.
Whereas it's not just a blind or random event where, you enter some uptrend or downtrend channel like in the euro dollar pair. These are backed by exactly what you're talking about is
Yep.
the higher inflation expectation with higher rates for longer. Start of January, we kind of eliminated we started to doubt, as I say we, as like the market as a whole started to doubt the Fed's goal to cut rates in March. So
Yeah.
that's what brought strength back to the dollar. And then we saw healthier economic numbers, which was, were had us leading to thinking, well, are we going to see higher inflation as a result? Because the jobs market's doing well,
Yeah.
wage growth is rising, and then today we get CPI higher than expected. This is a fundamental trend causing the technicals to line up to where it makes sense to short at the top of a channel or at a resistance level when it pulls back up. So
Yeah,
that's
that makes sense.
yeah.
And Frank, check this out. I thought there's a couple of points I want to make based on that concept, right? This momentum has been so heavy. Well, Noyar in the chat, I apologize if I said your name correctly or incorrectly, said my studies show me that large investors were dumping NASDAQ. And if you guys have been watching the show, then you know that we talked about the COT report earlier this week. NASDAQ, they sold in the last filing 2.5% bearish shift. And what really was interesting about the NASDAQ particular, well, first of all, it's the worst performing of the major three indices today. Take out the Russell, which again I don't want to talk about it, but the of the three big ones, right, this one is underperforming the others. Big short contracts were added in the last COT report data. We pointed this out ahead of this. We also saw in the COT data that USD got bought ahead of this week. So kind of interesting to see that playing out here on the COT report side. And I should also mention, just while we're on the topic, remember guys, take advantage. Our 35% off sale is ending soon. The link for that, we'll drop a link in the chat. If you'd like to speak with someone on our team who can get you set up with a copy for that huge discount, again, it saves you hundreds of dollars. If you've been thinking about getting a copy, take advantage, click this link, send us a message now. We'll get you set up with the tool so you can look at COT data and all the top setups, algorithm stuff on your own. But Frank, I wanted to point something out too. This inflationary report, I listened to someone last night, changed my perspective because I hadn't really been thinking about it. This stock market rally that we've had in the last few months, I mean, take a look at the weekly chart. He was pointing out that the inflationary number in 2023 in January was hotter than expected. Because check this out. So here's Jan 23, okay, last year. Prior to that, the stock market ran up. That caused the CPI print in January of 2023 to be hot, okay? The same pattern emerged this year. And I thought, whoa, wait a second. Jan 24 right? We had a huge pump into the end of the year and then hot inflation. And what the guy, I can't remember, it was somebody on CNBC, I was just listening to a conversation, pointed out that when you get a huge stock market rally, it is incredibly stimulating to everybody, because everybody who has 401ks and stock holdings, they just got a big bonus added to their account. And if everybody's getting a bonus and they go spend it on, vacationing and buying things and whatever, the point he was trying to make was that oftentimes a huge run in the stock market can be incredibly stimulating on its own and do some of the job of the Fed without them even needing to cut rates. What do you think about that? Isn't that kind of a fascinating point?
Yeah, I think those trends, I didn't actually know that it was the same scenario as last year. So pointing that out was kind of interesting to see. They kind of fueled themselves for this in a way, which is
Yeah, and again, you saw a little bit of a pump. I'm pulling it up now. It's not a massive pump, but at least from the lows, there was the low to this rally ahead of January. That was, on the Nasdaq, that was 16%. That was a huge bump from the low. So perhaps people were, I don't know, something to think about. But Frank, I'll let you go here. I know we've done a lot of commentary here this morning. Thank you for coming in, hanging out, and
well.
I'll let you
Can I
move on
say
with your day. I know we got a bunch of stuff to get done. Yeah.
one more
Go for it.
thing?
Yep.
I just want to talk about gold, or not gold, oil I want to talk about oil with you and just ask you a
Yes.
question. My
Go for it.
thought on oil right now is could this be a bullish case? Because I guess I'll just say my thought first is that better economic numbers, we have a supply issue going on that's
Mm,
probably going to last through 2025, and we have hotter inflation.
hmm.
Say the trend of inflation continues to go up um, this year. What do you think about oil versus, you know, gold or the S&P and the dollar?
No, it's a really good question, Frank. And I think, we spoke about this a little bit yesterday when we were just chatting in the office about oil. And I'll tell you, first of all, for anybody who's listening, I have a position bullish on energy through the ETF XLE. I've been playing this one. I've sold puts on XLE. I've got the screen pulled up, Jen, if you want to show that. But XLE this is an energy ETF. This has companies like ExxonMobil. It has Chevron, CVX, right? So some of these companies that are very, they produce energy for a living. Well, I've got a position on here where I've sold puts. If I do get filled and I can build a position on energy, I'll be happy to do so. But I think you point out some really key stuff there, Frank. The economic reads have been strong. You have inflationary prints that are still showing, inflationary. What does it tell us for the oil market? Well, inflation being hot today, Frank, is like this economy is not rolling over. That you can read it that way. Like it's the demand side is strong, in terms of economic stuff. And so that strength is probably going to continue to be a bullish pressure for oil. And it's actually kind of self-fulfilling in some ways, because if that strong economy makes the price of oil go up due to demand, that contributes again to inflation. And it can potentially run into a bigger trend this year. Again, we saw a huge slide on the kind of end of the year 2023 on oil. There is some counterbalance to it. This is kind of getting in our tinfoil hats a little bit, but it is an election year. And as you can probably imagine, if you're trying to get reelected for presidency, this is not even really conspiracy. And any one of us would do it. So I'm not trying to call out the Biden administration in particular, but anybody who's president, they want to keep these oil prices down, because the last thing you want to do if you're trying to get elected for president is everybody be really upset at the gas pumps. So there is that force that could work against us. Perhaps U.S. production could increase, even beyond what we're starting to project. However, the strong economic read and the token, the back pocket card is if China comes back online. And we've talked about this together a good bit. If China comes back online, and you see the Chinese stock market rebound, as we've started to kind of point out in some of the videos recently, if you get that, Chinese economy is a huge demander of crude oil. And if their economy is doing well, they're going to demand a lot more of it. So I do actually think that the bull case for oil this year, despite it being an election year, looks pretty good. I mean, you've got a pretty, what I think could be relatively cheap oil, but we'll see, Frank. What do you agree? Do you disagree? Do you have any positions on it?
Well, I know that you were long China stocks. I believe it was FXI is
Yep.
the symbol for it on WeBull. Um, I I do agree if China does come back, then that's going to be a huge increase in demand for oil because you're going to have more output, more jobs, more people at work. So that will be a huge factor into this. And I was just looking at it from a U.S. perspective, but yeah,
Yeah.
I do agree. I think after seeing today's number and then with the accumulation of all the other numbers we've seen so far this year, I'm probably going to look at another long position on oil. I've been trading it to the upside,
Mhm.
and I feel like this trend is going to continue. So yeah, I'm
Yeah.
with you.
Well, that's a great question. And again, a very, very important area of the market that I think, while not everybody in the audience trades oil, it's a market that, just like the dollar, it impacts all of our trades. Even if you trade, if you trade the CAD, if you trade the dollar, the oil market is mixed in there in some way or another. So thanks for the question, Frank. Good stuff on the show here. Thanks for your reaction to CPI, and I'll let you go here from now.
Okay, thank you.
All right, see ya. All right. Thanks to Frank, as always, for coming on. Always good to have his commentary and great points about oil here today with this inflation print. Again, let's reiterate those numbers here this morning, guys. We had CPI 3.1% year over year. That was a real strong print. And what do I mean by strong? Well, inflation being hot is likely being caused by the tight labor market, the strong economic reads that we keep getting, and a consumer that seems to continue to be strong. These things are producing high reads in most economic reads right now. And as long as that continues, we remain bullish USD, right? Which has been the case. We've been bullish USD. I have positions on euro dollar on the short side. And look at this, guys. Bitcoin hardly moving on this. Although Bitcoin has been a risk asset, I would have expected this to come down a little harder in this sort of CPI hot print, because again, as we've seen over time, there is sort of an inverse relationship between inflation and oil. As inflation goes up, I'm sorry, not oil, inflation and Bitcoin, right? Not quite the case here today. Seems like Bitcoin staying very resilient for those of you guys who watch it. Quick look back at the NASDAQ. Again, look at that straight shot to the downside there. S&P 500 down 1.17%, 1.18 now. Take a look at the VIX. VIX is jumping here on this as again, market participants are now kind of being forced. And look at it. We'll talk about it. Okay, you got me. The Russell. Look at this sell-off on the Russell. I will say this. So I have sold puts on the Russell at IWM is the ticker that I've traded. I have puts that I've sold at 188. So if the Russell continues to come down, worst case scenario for me would be that I have to buy shares at 188. So I'm still a ways away. And if this rebounds in the next few weeks or whatever, then I won't have to do anything and I'll just collect that premium on the put that I sold. But I also wouldn't mind if we do get that pullback. I really wouldn't mind picking up some shares in the Russell for the second half of this year, despite what this news here tells us today. This is terrible news for the Russell, right? This completely takes the short-term bullishness out of the Russell in my view, because hot inflation means rates are not coming down likely as soon as people were thinking. And if that is the new base case, gold and the Russell, we've talked about this over and over. Look at this, by the way, guys. Gold, take a look at the daily chart. We are flirting with the idea of breaking under the lows of this structure that we've been watching for several weeks now. This is pretty big. And we've been dollar bullish. I've been not necessarily bearish on gold. I've mentioned, and I said this at the top of the show, I've been neutral on gold. Remember, I put my in for Nick and neutral, right? So I'm neutral on gold. And, however, if this starts to really break, we could be looking at a gold move back down into the 1900s. And Again, that would be ending the longest streak in history that we have had above the $2,000 mark on gold. We have stayed above 2,000 since, well, back here when the Fed officially pivoted December kind of 13th of last year, right? We had the big FOMC meeting, but as we speak, it looks like we are coming back to test that 2,000 mark. Bulls, we'll see if they can hold it. If they can't, we're probably, in my view, going to see a slip lower into the 1975s, 1980s region, which would come back to completely engulf and retest this candle. What is so significant about this candle? It was a Fed day, in which case Jerome Powell basically signaled 3 rate cuts. So if the challenge, a way to think about this, guys, for the gold traders out there, is that if you get expectations for 3 or less rate cuts, we probably go back and retest this. Because remember, the market said, oh, well, if you think it's going to be 3 Fed Jerome Powell, then we think it's going to be 7. And that's why the market rallied, right? On gold and the stock market and everything else. But then if we start to sober up and say, oh, wait, you guys were serious about that 3 conservative rate cuts, maybe we head back to retest that. So be very, very careful. Anyways, gold continues to look bearish here for now. We'll watch that close. Stock markets continue to roll over. And although I am bullish on these things and have been, I am going to try and hold my tongue, try and be patient here on setups. If I take any trades, I'll share it inside of the Discord, like I said. If you're not in the Discord and you would like to be, click the link. We'll drop a link to chat with someone on our team about that. If you would like to get some more information, sign up for the VIP group. You can see all the trades being taken with details, etc. It is not a copy service. This is an educational and insight service. So if you're looking to get access to that, you can sign up here by sending us a direct message, speak with a rep, and get some information. Buy the dip on gold right now. I mean, longer term, maybe, but short term, I would say that there's a good chance, not a certainty, but a good chance that this is kind of a game changer in the short term for gold and that we could see further downside to come. This just took out the wind in the sail for a lot of interest rate sensitive areas of the market. I mean, the Russell guys, this is telling you everything you need to know. These are small cap companies. These guys were really hoping for rate cuts to come sooner, right? These companies are more debt sensitive. And so a rate cut would have been great for them. And we're not seeing that from today's CPI print. It is less likely that we're going to get rate cuts anytime soon, sending the Russell lower. And again, you might be asking, but Nick, why have you sold puts on this? Well, because in the second half of the year, I do think we probably start to see those rate cuts. After the market really sobers up about rate cuts, I think that's the time to buy the Russell. Like, we will see rate cuts, I think, at some point. I just haven't been so optimistic like everyone else has been, which, to be fair and to candidly speak, I've missed some of the rally here because of that. But I think that I'm going to get my chance to pick up indices at what I believe to be a much better value. So we'll wait. Perfect spot, Nick. I'm watching gold at 2,000. Is it 35% off all time? No. 35% off is currently available. If you are somebody who is looking to get access to the Edge Finder, we'll drop that link one more time. Send us a direct message. Click this link. When you speak to someone on our staff, you can get that 35% off discount. So all you do to get the 35% off, click the link. It's been dropped in the chat for your convenience. It's also in the description of the video down below. Click chat now. Edge Finder 35% off sale. Click that, start a chat, and you will be instantly connected with a real person, not a robot, not a landing page. You can speak with a real person to ask them questions about what we offer, about the Edge Finder, about our VIP group, whatever you'd like to get access to. But again, take advantage of those discounts while they last. 1.6% down here on the NASDAQ. We'll see how those close out today. Really crazy. Morning, Nick. I got my coffee. Enjoy that coffee. I had mine before the show. If you can't tell, that's how I can speak so fast, is because I drink coffee. Are you going to buy the pullback on the NAS? I'm thinking about it, Aaron. I'll watch it. If I take that trade, I'll share it in VIP. Candidly, I do kind of reserve a lot of my full trade breakdowns, entries, and explanations. That is something that is reserved for members. Not to be like haha, you have to pay, but it is a service. I answer questions like all day long between people in the chat. So it is something that is work for us, me, Frank, and Ivan, who share our trades. So, it's a service. If you want to join it, take advantage, click the link, chat with somebody, get set up. I wish I had a spare $1,000 to buy more gold, says Metal Seer. What about silver? Look at silver also taking a hit here this morning. Gold seems to be breaking that support level, guys. Quick look at euro dollar. Remember, we are short euro dollar in the group. This is awesome. We're continuing to see a nice follow through move. I shorted this off the daily chart. Conservative stop loss. And so far, this channel is holding true. Shared this in the group. Like I said, let me show you what that looks like. Let me see if I can pull this up. Forex trades, boom. So this is the euro trade. I sold it yesterday. I mentioned that the COT data has been bullish for USD, that the overall trend has been bearish with a nice rejection at the top. Stop above the previous swing high. Edgefinder has been bearish on the euro for a couple days, so I picked that up. And the dollar recently broke out of key resistance with less dovish commentary from JP, strong PMI and NFP numbers. So today we could add to the list, by the way, that CPI numbers continue to promote more bearishness on the euro dollar in my view. I mean, the market agrees. That's why we're selling off here this morning. So kind of interesting to see that. Aaron says, I'm going to join soon, get the Edgefinder as well. You deserve my money. Well, again, we've worked very hard to build the tools that we offer and the service that we offer. So I appreciate that comment. If you're somebody who watches the videos, you can totally watch stuff for free. You can get value out of it. But again, we do reserve, this is genuinely speaking, this is like the life's work of several people, to build tools for traders that I don't really think exist anywhere else. Like to have something that, computes and generates bullish, bearish readings on everything for you, pulls in all the data, visualizes it in a simple format, and has a constant maintenance team to keep all the data rolling smooth. We work really hard, candidly. Like it's a great tool. We've been really proud of what we've built and we continuously improve it and add new features. And let me just say, Aaron and anybody else who is thinking about getting a copy, yes, this is a sales pitch, but we work really hard to deserve the prices that we offer to people. And if you're somebody who is looking to get a copy, it is 35% off today. If you've been thinking about it, don't miss that sale. That is a huge discount off of the tool. It saves you hundreds and hundreds of dollars and is ending soon. So don't miss it. Take advantage and pick it up. So, yeah. So just looking at the USD bullish and sell euro dollar. I mean, it's a little bit more than that. We still, despite me being bearish on the euro dollar, I still had to wait for the setup. So I waited for this thing to pull back a few days, hit the top of this range that I was watching, and I shorted after some rejection. I wasn't first to the trade. Like I didn't short up here. I shorted a little bit after the fact, but today we're seeing some follow through, which is great. Bloomberg terminal for retail traders. That's a great way of putting it, to be honest. Like it's not like Bloomberg terminal where it's just unlimited amounts of data. We've reeled it back on purpose. Like the Edgefinder has a lot of data in it, but it's trying to consolidate the data into like a formatted way that's not so much stuff that you don't even know what you're looking at, right? So look at that. The indices continue to move lower here this morning. Can I sell euro dollar now? I mean, you shouldn't be asking, to be honest. I'm going to give you some tough love here. You should never be asking somebody in their stream, what do I buy? What do I sell? Because first of all, I'm not a magician. I don't know what the markets are going to do. I weigh probabilities and I wait for good risk to reward setups, right? So selling euro USD, I don't think the trade is there anymore, right? The trade was back here. That's why we took it in this level. Obviously, I know, like, easy to say, hindsight, and I don't get it right all the time. So, bear with me. But my point is, you can't just chase the market, and you can't just expect someone else to just tell you like, oh, magically, yeah, euro dollar is going to keep going. If you don't have a system and a strategy in place, if you're not using data, if you're not having a good risk management system, if you don't have a clearly defined way of entering and exiting the market, managing risk, you will be just another person donating money to bajillionaires on Wall Street. Okay, point blank period. If you don't have everything in line, systems, risk management, strategies, fundamental data, if you don't have all of your stuff lined up with a very good precision, you will not make money in the markets. Like, it is so hard to make money, point blank period. You're competing against geniuses on Wall Street, like literal geniuses, computer science, quant computing geniuses that build all the systems on Wall Street. That's who you're competing against. You think you're going to win without a strategy? So there's my tough love, right? You cannot make money in these markets. You simply cannot make money in these markets if you don't have a rigid risk management and trading strategy that you have back tested thoroughly. You simply cannot make money. Long term. Short term, sure, you can YOLO your account on gold or YOLO your account on the NASDAQ. And if you get it right, then great, you just made a bunch of money. But long term, you will absolutely be donating to the markets if you do not have a strategy that is rigid, thoroughly defined. You have everything in line. Like, you need to be A+, precision with what you're doing. Otherwise, you are losing money in the markets, guaranteed. Okay. There's your tough reality. I'm not here selling you the dream. To be completely honest with you, I am pretty, it's incredibly disrespectful when you see people like flashing Lambos and stacks of cash and selling the dream as if trading is easy. Like, this stuff is just absolutely brutally hard to get figured out. Like, think about, if you're somebody who's new to trading, think about like the hardest thing you've ever done, magnify it by like 50 times. And that's how hard it is to make money trading. Okay. And I'm almost not even exaggerating, maybe a little bit, but it's so ridiculously hard. You have to be so thorough, so precise, so dedicated, so hardworking. Okay. And I know that there's a lot of you in this audience that are on the same wavelength as me. You hear me saying that, you're like, yup. You're like literally nodding your head. You're like, dude, it was so much harder than I thought. I just remember when I first got started, I just thought, like, I don't know what I was thinking. Why did I think trading was going to be, kind of a breeze and I'd be able to pick it up in a few months? Like, do you think that you could become a doctor in a few months? Because I know it's not quite the same thing, but the level of difficulty, I've started a business and I've started, and I've figured out how to trade. They're like equally difficult. Both are incredibly hard, right? It's so hard to start a business, so hard to start a trading, journey that actually ends in being consistently profitable. It's ridiculously hard. Starting a business is incredibly hard too, because, you have so much expenses, things come and go. It's hard to find the right people. It's hard to find the right products. It's hard to handle customers. Like, everything is hard. At the end of the day, success is hard, right? It's not easy. Nothing is. Trading is not easy at all. Okay. So anyways, sorry, rant went too long. Let's check back in on the NASDAQ. There's the NASDAQ pulling back 1.71% down. The S&P 500 is down 1.35% here this morning. And even the Dow down 1% on the day. And that Russell just getting smoked at 3.6% down on the day. Crazy. Gold almost down 1% and crossing almost at the 2,000 level, guys. We are just at 2,000. Yeah, crazy. Only working to win back all my losses. If I could roll back the clock, I wouldn't do this again. Strongly consider not doing it, in my opinion. Honestly, Jimmy, like, here's the thing though. If you're just working and trading just to get back to break even, you candidly, like, you might just be digging yourself into a bigger hole, like trying to get back your trading gains or your trading losses, like without actually the long-term dedication it takes to become consistently profitable. It's a good chance you land yourself in a bigger hole. So if you have plans to quit trading, or you're just trying to get back to break even before you quit, my opinion, it's better just to stop completely. Like, if you don't actually have your heart and soul into this stuff, get out of it. Yeah. Teaches us not to gamble the markets. I can't explain to you how many messages. Imagine, like, on my side of things, like, I get a lot of DMs, I get a lot of like comments and stuff. You simply cannot imagine how many people I've heard their terrible stories of how much money they've lost. Like, you get tired of it. That's why, like, when I see people that are like, flexing stuff, it just is repulsive to me. I'm like, the stories of people losing everything, they never stop rolling in. And I know those people get those messages too, and they're still flexing on them. Like, that's just horrible to me. I don't know. you might say, well, it's motivating and all that. But, you know, to be honest, to me, that stuff is not motivating at all. What's motivating is being able to, you know, reach financial freedom and, you know, live a healthy, happy life with the people that matter most. Like, I know that's so cheesy and like, oh yeah, like, but genuinely, I think a lot of people probably would agree. Ranter Nick. I am a ranter today. That's so true. Anyways, yeah, big slides here, moves. I'm going to have to put together a video to recap everything that we saw. Again, a big surprise on the CPI front. Everything was hot. Everything was hot. Core, CPI, year over year, NFP, PMIs, retail sales. At some point, you just have to say, look, follow the money. The dollar is a bullish setup here for me. Still has been. I am in longs on the dollar. I'm short euro dollar. I'm waiting on pullbacks on the S&P. I do like the S&P and NAS on the long side, but I'm trying to be patient there. Gold probably looking like it could break out and get bearish. But in the meantime, we'll look at yields, by the way. 10-year and 2-year just flying high this morning. Crazy. Euro dollar. What do I plan to do on this one? I'd like to trail a stop. But I am going to try and wait for some structure to form. If you get some sort of like bounce and then follow through move, probably trail stop. I'll be looking for a lower high, in which case I'll probably trail a stop from there. So if you're in the group and you're watching euro dollar with me, you know, obviously trade how you want to trade. But for me, what I'm planning to do is, again, I'm waiting for a bounce. I'm waiting for that bounce to get taken out. That will be my cue to go ahead and trail a stop lower. And if this market comes all the way back, then it is what it is. But I mean, I could actually, you know, what I might do is I might trim my trade. I love to do this. I see no issue in taking risk off the table, even if it doesn't mean trailing into profit. So actually, this is what I will do. I'm going to trim my trade. I'm going to take some risk off the table while still keeping the possibility of losing money open. In exchange, I'll be, you know, given this some room to move around, which I think could continue to head lower. But yes, I'm watching EU. I'm going to trail a stop, likely to here, just above this swing high. If that gets taken out, there's no reason for me to be in the trade from a technical perspective. So I'm going to trail that stop. I'll let you guys know in the VIP room. If you're not in there or you want to copy the Edge Finder, this is your last call for the day. 35% off if you send us a DM right now. We'll drop that link one more time here before we end the show. If you're looking to get a copy of the Edge Finder or you'd like access to our VIP room, send us a DM right now. Click this link. It'll connect you to a real person on my staff who can get you set up with a copy of the Edge Finder for our 35% off sale. And if you bundle it with the VIP, by the way, it's a massive savings, like tremendous. So if you're thinking about it, take advantage. Today's the day. You get 35% off as an offer. That is a huge discount. And maybe we'll see some of you guys in the Discord in just a second. For those of you who are already in the Discord, I'll be updating my trade in just a moment. So keep an eye on that. And we'll have a video out for the rest of the viewers on the channel. I'll have a video out later this afternoon, kind of recapping everything. So stick around for that. Trade safe, guys. Have a great rest of your day. And we'll see you back in just a bit.